Good morning, this is Ron Brown. It's Monday, June 5th, 2023. I'm doing this about 10:30 in the morning Central Time. I'm just coming off a week-long bout with COVID, so my voice is a little raspy. I'm doing pretty well, not back to 100%, but I wanted to go ahead and do something today because I don't want to get too far behind in this webinar series. Anyway, as you know, this is called Unleashing the Power of HCSI software, and the techniques are primarily to find low-risk trades and control risk. That's my main goal for this, and we're going to use the market as our teacher. I say this because there are so many options out there for teaching. We can observe and learn by watching the market rather than listening to other people. Now here's my standard risk disclaimer. I'll just read these last two lines. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. And as we all know, risk can be considerable, but so can reward if you get it right. In this session, I'm going to start by talking about a chart. Now, this is my chart over here on the left with HCSI, and this is a chart that Mike MacDonald, who's a longtime HCSI user, he based this chart for thinkorswim off of my chart, and it contains all of the elements. So the 3 and the 6, let me get an arrow up here so it's a little clearer. And I'll make these disappearing arrows. Okay, here's the 3. Here's the 6. Here is the 18. Here's the 50. Here's the 100. And here is the 200. And then down here, of course, is the volume. I see he didn't put a 90-day average volume line in there. I'm going to pause this video and do that. So I've added the 90-day simple moving average of the volume. There are no pocket pivots in here. That's going to be in my HCSI charts only. But you can see the 3 and the 6 crossovers here. Right here, and then this is the 6 versus the 18, and then this is the 18 versus the 50. So it's a very nice representation. Now, when Mike created this, he put the volume profile in because he couldn't think of a substitute for the volume point of control. We just don't have the here. He doesn't have the formula for that, neither do I for thinkorswim. So I suggested the 10 period. No, I take that back. I suggested the 2 and 13-day force indexes. And over the weekend, I've been experimenting, and I have found that the 2 and 14-day, once again, the 10-day force index is pretty close to the volume point of control. Doesn't always come out the same, but it's close enough. Now I've got Apple here and I've got Apple here, and you can see that on these pullbacks on the 10-day force index, says 10 days right there, that this corresponds to what is happening over here in HCSI. Now, of course, I'll be doing most of my prospecting in HCSI, but I'll also use this chart in thinkorswim just for a quick confirmation as I'm flipping through charts. And I'm going to share this link when I send the link out for the updated views, filters, and combos today. Those of you who subscribe to get the files while I'm developing them, you can see I'm struggling a little bit today. Anyway, I want you to delete your warehouse views and your chart views. You should know how to do that by now. Just locate the webinar series in the warehouse and click on delete, and then when you install the add-on, the latest ones will replace it. Do the same thing here with the charting module. It's got to say webinar series, just delete it, and then install the add-on. I'll be sending the link out, and then you'll have the latest, including this one. Now, I've done this both for the black version and the white version. Here's my standard chart here. I put a 2A chart in here, which also contains the force index. It's just a nice reinforcing indicator. It doesn't always track the same, but it does a pretty good job. Look at this cell back here on this. Let's go back to Apple. I'll make this full screen. Get this out of the way. Put a crosshair on here. Okay, here's a cell signal on the VPOC. There's an earlier one here, and then confirmed by the force index. Here they both went on the same day. Here they both went on the same day to the downside and the upside and the downside. Here we got an up on the volume point of control, but it was filtered out by the force index 10-day. This one stayed negative the whole time. There were some moves up here on the VPOC, which is a very sensitive indicator, but the force index stayed negative, and you'd put it into context with what's happening with the moving averages. The 3 was below the 6. You can see this. It remained there all the way down to here. There's an effort to rise, and on that day, the VPOC turned positive, and then one day later, the force index 10-day turned positive. So pretty good correlation, not perfect. The sensitivity of the VPOC 1010 turned negative for one day, but look at the relationship of the 3 to the 6, both positive. So you might want to hold off on taking that trade. And then here we got the VPOC going down, and then followed by the force index. They both went positive here. We had a dip with the force index here just for one day, and then it turned green again. VPOC turned negative here. Force index followed a few days later, and it found support on the 18, and they both turned positive the next day. And so on and so on. And not perfect, but not bad, and just it can be used as a reinforcing indicator rather than relying just upon either the volume point of control 1010 or the force 10-day. That's enough of that. I just wanted to point it out to you. These charts will be, this chart and the white version will be included in the new installation after you delete your files and reinstall. This I will send a share link for thinkorswim if you want to use it too. Just nice to have both. Okay, I'm going to move on here. Things I want to talk about on Thursday, and I hope I'll be 100% by then because like I said, I don't want to fall too far behind in this webinar series. While I'm in here with Apple, I want to bring this chart up again. I'm going to move up to my 1C chart, which is the relative strength to the SPX for Apple, and you can see that Apple is out to a new high. Let's do a monthly chart on this. It is at an all-time new high, and you can see that it's outperforming the S&P 500. Let's go back to the daily. It's a little clearer. You can see that it's up here. So with the S&P up, well, S&P is barely up now. It was up higher, but the NASDAQ composite is up. I'm looking at a different computer here. Let's see what it's doing. It's actually up 65 points. And much of that gain for both the NASDAQ and the S&P is because of Apple, because of the huge market capitalization. If we were looking at equal dollar weighted versions of the NASDAQ composite, the NASDAQ 100, the S&P 500, and so on, these charts wouldn't be nearly as strong. It's just so much weight is concentrated in stocks like Nvidia, Apple, and several other big names, including not IBM, Microsoft, Meta, Netflix, etc. I'm going to drop back down. I'll just use the number chart. And I want to point out to you, you wonder how you get on these stocks. Well, this is why I have developed these warehouse views where we look at the 3 and the 6 crossover and the VPOC crossovers and so on. And Apple, not that long ago, in January of 23, was trading down at this level right here, and you can see how much it's gained over that time period. Where did the move begin? Well, if we look at the 3-6 crossover, which I mentioned just a minute ago, you can see that happened on this day here because the histogram turned positive. The crossover may have happened right here where the effort to rise and the strength scenery returning VPA flags occurred. But that was the initial thrust. And now I'm going to drop down to that other chart I'm including, which has the force index in it. I mentioned this earlier. Okay, so the VPOC happened first, confirmed by the force index. On the next day, there was just some short-term profit taking, and then it took off. There was a test, confirmation of that test as it started moving up. And the 3 was above the 6. You can see that. And the 18, or the 6 and the 18 didn't join the party until here. So this is always the earliest indication. And then if you use this chart and look at the group, that can confirm whether the stock is moving with its group, or you can go back up to 1C, and you can see the industry group, which is green. Is cyan. Green is the strength compared to the industry group. So at this point, the group cyan started to turn up, and the group was actually outperforming Apple a little bit until it got over here, until Apple got over here, and then notice that this turned up, and this is where it actually started outperforming the group a little bit here, and then it really started outperforming the group at this point right here. And compared to the S&P 500, you can see that it was slightly outperforming and then continued to really started outperforming the S&P right here. And these are just all charts, or these are charts that I put in to help us get a feel for relative strength and direction of market. But the key indicators in the system that I'm using, and I'm calling it a system because it is a system, it helps us focus, is the 3-6 crossover is the first indicator, and then these other crossovers of moving averages as the stock moves up confirm that strength. But you want to be looking for these short-term entrances. Now, with a fan requirement in place, you never would have seen this, so this is why I have multiple ways to screen or scan for these, and I'm going to show you one or two today that I'm including in the files. Now, for early entrance into a stock, you're going to have to go against the trend because everything is negative here. The 200 is clear up here. The 3 is below the 6 until this point right here, and it's got to cross through all this resistance before it gets going. But when you have the confirmation of the group along with VPA flags and volume coming in and so on. Volume based upon volume point of control and the force index, confirmed later by pocket pivots and so on. That's a pretty good indication that buyers are stepping into these stocks, or this stock in particular. But if you miss this trade, this is called the impulse. That's the impulse. And what we're looking for is a reaction or a safe place to get in. Now, the way I've set this system up is that I'm looking for pullbacks where the 3 goes below the 6, and then it finds support, contextual support within the moving averages, and that's what happened right here. That's not a very good arrow. Somewhere in this area right here, as it pulls back and then it crosses over again. Now, had this trade been taken after the pullback, if you're using this as a pivot low and your execution is somewhere in there as it takes out the high from the prior day, this area here would be the stop, and you can see that this did not pull back and take it out, even though the 3 did cross down below the 6 again. So, of course, there are decisions to make, and when you're trading these large cap stocks, obviously there's a lot of money flow, capital in and out. A really good way to trade these big cap stocks without risking a bunch of money is to buy at the money, in-out, what are called in-out debit spreads, and that's something I'll cover a little bit later in this webinar series, where you buy 1 strike in the money and sell 1 strike out of the money, and you risk so much money. Usually $250 is all I'll risk on a trade like this, and when this happens, you don't sweat it. You just let it go, and then hopefully it'll stay above your entry point and move on up and expand as your profits expand. But what I want to point out is that there are pullbacks all along the way, even on these stocks moving up. So the impulse and then the reaction would be right here. More impulse, here's the reaction. We're looking for support off of a moving average. It doesn't matter which moving average, but a moving average. Now, long-term holders with a bunch of capital can use these pullback points to add to their positions if they want to build large positions. Don't buy up here. Don't buy the impulse, buy the reaction. If you're shorting stocks, it's just the reverse. And let's move into my warehouse views. Now, these columns I've explained many times, but I'll briefly cover this again. This is the days since the 3 crossed the 6 to the upside and to the downside. Days since the volume point of control crossed up or down. These are my primary prospecting columns right here. So on these views, and I'm working on some new ones. I doubt if I'll get to these this week, but I call these lower risk entry systems. And what these do, these systems, lower risk entry systems, look for pullbacks in the long-term trend. These are requiring that the fan be up, and I'm looking for pullbacks. And I'll just click on this one right here. You're going to have these in the latest installation if you're getting the files early. And this is a 3 and 6 day moving averages are negative. The VPOC 1010 is positive. So what I'm looking for here, if you look at this column right here, you can see that the days since the volume point of control turned positive is in this column, and the 3 and 6 negative are populating this column right here. So I'm looking for stocks that are pulling back in the long-term trend. Notice it says trend up. I'm sorry, fan up. Right here. So let's take a look at this. I'm going to turn off my arrow key. And this is the end-of-day version. Let's look at the end-of-day intraday version. The way I've set this up here is the setting up after a pullback intraday version of that. Two different combo ranking sorts. On this combo ranking sort, I'm using the sorry, I'm getting confused here. I clicked on the wrong thing. I'm explaining this down here. 3 and 6 day negative, VPOC up, fan up, and I'm sorting on the percent industry group on the end of day. I just want to see which of these industry groups might be setting up. And you can see it's sorting on the industry group, and a lot of couple of large pharma, 3 large pharma utilities, biotechs were setting up based upon this right here. I wanted to see how many are in each group that are potentially setting up to go. And then this is the intraday sort, which uses the percent range and the intraday percent price change. If I go back to the end of day, this is a percentage price change. Then back to the intraday percent range, percent price change. It brings the stocks that are moving to the top of the list. And here's Shopify. Let's take a look at Shopify. The 3 went below the 6 8 days ago. Remember, 0 is always a crossover day. And the VPOC turned positive 2 days ago. So I haven't looked at Shopify. We're going to take a look at it and see how this works. So let's start down with the VPOC, which turned positive. And you can see the Force Index 2 turned positive. On the same day, there was a VPA flag here. Strength seen returning. Here's your impulse, here's your reaction, and now we're getting support. There was no particular moving average support. It got down close to the 50, but there was a VPA flag and also a pocket pivot in addition to the VPOC and the force indexes. And here's a confirmation of this intraday today. And the group was moving up. And if you look very closely here, I'll get the arrow here, you can see that the 3 is sticking its head above the 6 today. So this is a setup. This is a relatively safe entry. Why do I say that? Because we've had the impulse move and then the reaction move. The 3 has been below the 6 right here. It did go above it right here. This was a false signal. But several days with the 3 below the 6, and now it's starting to pop up in the early signals where the VPOC, or was the VPOC, and a pocket pivot, it looks like. This scan is meant to locate stocks like this. Now, what if this stock does interest us? Get rid of the crosshair. I'm going to go to a different chart. I'm just going to go up here to the chart with the intraday statistics. I want to see if there's a lot of volume day. Really not a huge follow through on volume today, but let's say I'm still interested in this stock. I'm going to do an alternate 1, bring this tool up. I'm going to click on the R key, make sure that this is highlighted over here. I'm going to go clear down here. Use that as a stop. I can see that I have black, and I don't want black. So I'm going to click on the arrow. I'm going to click on yellow, and now this is going to show up. Once the arrow is selected, you can move this around so you can see what the actual numbers are. Now, if I were to take this stock and use this as my stop, I would be risking 7.65%. What does that translate to dollars? Well, that's where I bring my spreadsheet up and decide if I want to take this stock. The first thing I would do is actually go into thinkorswim, and I would see if it's tradable as a spread, if there's enough liquidity. But instead of doing that right now, and like I said, I'm going to be doing that, I'm going to bring up my spreadsheet here, and let's just put shop in here. Using these now, I want my caps lock. So using these numbers, 59.86, and 55.34. I would only be allowed to buy 54 shares. Now, with a stock like this, 54 shares, it's going to have some movement, of course, to make some money. But just for fun, let's just make this $55 here. And that way I'm risking $251.90. My risk is $4.58 for a 7.65% risk. Now, if the stock moves up one level, or 1R, remember my R is $250. You can see that right here. If I move up to 1R positive, it's going to have to get up to 64.46, and my profit would be $251.90. A 2R would require a move all the way up to 69.04, which would be out of this chart's range. But realistically, it could get a 1R move out of there for risking $250 and to get to 64.46. And I showed you that in the spreadsheet, but if you look right here with this position sizing tool, here's your 1R reward right here on this dotted line. So you can put the numbers into the spreadsheet, or you can not bother with that, but you have to put it in the spreadsheet to know how many shares you're going to purchase when you're risking $250. So it would have to get up here to resistance. If you get up to resistance on this trade, you would make $250. Now I'm going to zoom out on this, and you can see to get to 2R, 69.04, here's your risk, 250. This is your risk window right here. Here's your reward window. If it breaks out and gets up here to resistance, you can see it just moved up on that update. That would be your 1R reward, and the 2R reward would be up here. And if it goes against you, you're stopped out here. Okay, I'm going to end this here. I'm losing my energy, to tell you the truth, and we're going to do more of this on Thursday, and I'm going to explain more about using the scans to locate these stocks based upon these 4 columns. Now, things are probably going to change before I finish this webinar series, but I'm setting these up under F, lower risk entry strategies, and I've got some other strategies that I haven't talked to you about, and I'll cover those on Thursday. These are bullish end of day watch lists, 25 stocks setting up after a pullback, slightly different filters, and then here is the 3 crossing the 6 after a pullback. Those are end of day, or that's end of day. the folder is. And then here's one. If you run the smart groups during the day, it's going to locate stocks that meet the criteria during the day or intraday. So I'll cover those on Thursday, and we'll talk more about these charts. And this area right in here on the warehouse view really is important for finding these low risk trades. Now, right now, I'm only dealing with the ones with a fan uptrend, but before the webinar series is over, we'll be talking about finding stocks like Apple when they're in the downtrend but are reversing. Thanks for listening, and I'll see you on Thursday at 2 p.m. Everybody's welcome to come to those. You don't have to be a subscriber to the files. Thanks for listening.